Welcome back to the Rebel's Edge. Well, all week, we and everybody else have been saying that it's all about NVIDIA. It's all about NVIDIA. Well, it might be a little more than just that, it turns out. But we've got three stocks that rocked on unusual activity. So that's why you want to stay tuned for the Rebel's Edge. Bang.
There she blows. Last one of the week, John. It's going to be a big week, by the way. Football season really kicks off today. It's going to be awesome. And then, of course, the NFL's not far away. So there's a lot going on in the backdraft. And I missed yesterday. You and Mark, I'm sure, did a great job. But I was out at the State Fair doing little radio, little TV, a little this, little that, which was a lot of fun. Patting you on the back. State Fair was awesome, though. Let me tell you, that they do it upright, and there are certain days that are a little bit easier than others as far as weather. I mean, we've had 97, feels like 100 and something because of humidity and all the rest of that. And then we've actually had a couple days that we had a monster storm, John, that came through there. First time in a very, very like 50 or so more years or something like that, where they actually had to get people out, get rid of them for the night, and then add a delayed opening the next day just to clean up. But a lot of fun, a lot going on out there.
Yeah, that must have wrecked heck with the played havoc with all of you that want to go to those concerts, Pete.
Yeah.
Because I know you're a big concert guy, and going to see Blake Shelton, that wasn't disrupted. But somebody, whoever was supposed to play the night that they kicked everybody out, I guess you had to refund a bunch of money.
Yeah, I think you're right. And they had good acts this year, in my opinion, not great. Usually it's great every single year. It's the biggest state fair in the country by far. And it's only 10 days. Texas goes 30. So for the people who want to argue about it, I could just tell you during those 10 days, it's a substantial number of people for a state that's pretty small as far as volume. And it's incredible fun. And they usually had great acts. This year, a little bit light, I think, on that side of it.
Well, maybe they were anticipating what we anticipate, Pete, with, it's a good economy. It's not a great economy. Mm-hmm. And how do we know? Well, look at all the places that are closing stores. We've got one of those coming up here on the Rebel's Edge. But let's kick it off with the macro minute. Mm-hmm. GDP growth was revised slightly higher to an annual rate of 3%, which is a good thing because we're still running at about the same for inflation, Pete. So, which means you don't get ahead. If the GDP is going up by 3% and inflation is running 3%, that means your dollar does. It's not getting hurt, but it's not making you any money. Mm-hmm. And the things you can buy are, unfortunately, because of inflation. Even though they say, well, it's only up 3%, that's 3% on the year. It's 20% since inflation really kicked in and the Fed started hitting it so hard. Mm-hmm. What do you got for macro, Pete?
Well, the magic of NVIDIA, to your point, John, I think it's very important because we talked all last week. It was all about, everything going on at Jackson Hole. And that did actually, the fruits of that labor waited till the Friday, and we had a monstrous move on Friday. This week, we've been waiting. We finally got it last night. What happened with NVIDIA? Well, NVIDIA actually got hit pretty good. It was down 5-6%. It's basically been down about 3% most of today, but the market is ripping to the upside. So maybe, and I think that's actually pretty healthy, John, maybe we've actually kind of broken away from the fact that is dictating what the markets are going to do, just one single name. And I think that actually is something I think that would be a positive. You look over at the SMH, it's up 1%. You look at NVIDIA, it's down 3%. You take a look at what's happening with the S&P, it's up 52 points. I think that says it all. NVIDIA, it's a great company, but it's no longer the dog that's going to absolute lead. Now it's just part of the rest of the markets, and I think that's a good thing.
Well, we did put an awful lot on that stock, and some people would say it disappointed. They beat on every metric they could beat on, Pete. Yeah. The only thing is their Blackstone chip or whatever it's called is a little delayed. But I think the stock kind of wore itself out, Pete, trying to get back from that $91 roughly low print was 90.69. So from 91 all the way back to 125, that takes a lot of work. I used an example earlier today, Pete, saying if you've seen the video of that young woman running in the 800 meter and she falls after the first 400 meters and gets trampled by basically the other elite runners, she gets up, catches them, and passes them. But so you can imagine what her kick might have been like if she didn't have to do that. But the stock, I think it spent itself, and all of the buyers spent themselves getting it back up to 125. That's just one man's take. All right, let's take a look, Pete, at Bitcoin, because I'll say fantastic futures, Bitcoin, and unusually strong after being unusually weak yesterday. Basically a swing of almost $3,000 to the downside and then back up.
Yeah, that is amazing. I'm going to hit that VIX, John, just because I think it is important. That's the one thing that has been very solid. As a matter of fact, we're in the 15s now. The flows are interesting because of what happened with NVIDIA, and you might think, oh, all right, well, that's going down. That means volatility is going up. That isn't really the case. We're actually at the lowest of the week for the volatility index, and it has pulled back dramatically. So will we see a 1% move? Yeah, it looks like we're going to see exactly that. 52 points to the upside for the S&P is almost exactly 1%. So once again, the VIX is exactly on, and it's giving us what we wanted. We knew it would adjust post NVIDIA, but I think going into NVIDIA, it was inflated just a little bit. We were up towards 17 or more. And the reason we didn't know anything about it. Now that we have that information, it has calmed back down. I would not be shocked to see that volatility index, John, as we go closer to the weekend, maybe tomorrow. We could very easily be in the 14s. So we'll see how that actually plays out, especially with the long weekend.
Yeah, long weekend. Greg McDermott was pinging me, Pete. He's one of our great leaders and instructors and traders. Yep. And he was saying, John, have you already dialed in Tuesday's date? And I said, yes, I have. And for those of you who don't understand, when you're looking at time decay, folks, it starts today, accelerating, because tomorrow will be, even though it's a full session, it'll feel like a half day. Most people will be gone after we get the early morning economic reading. And then we don't trade Saturday at all. We don't trade Sunday at all. And we don't trade Monday at all. So you got to put Tuesday's date in when you're already getting ready for that big time decay crush.
Yeah.
All right. Let's talk a little bit, Pete, about Best Buy. Another one of your Minnesota companies, probably a company that should be given a lot more money to the University of Minnesota. You hear that, Best Buy? Because, you should. Everybody else has millions of dollars of NIL. What about you, Best Buy? Anyway. Best Buy blew it out, Pete, and we had unusual activity. We had them buying the September 6th, so next Friday expiring, 90 calls. There you see it on your screen. They paid $349. There was the stock this morning trading up over 100. So when you're seeing unusual activity, somebody's making a bet, the stock goes higher. It's been as high today, Pete, as 104. In the pre-market and 103.71 in the regular market. So the right to buy it at 90 when it's 103 is worth $13. You paid how much again, folks? How much? Exactly. So this was a home run and great earnings report, Pete.
It's why we do the UOA. It's why you and I took all the information we used to use from the trading floor, off the trading floor, into the algorithms, into our computers, so that we can still trade and have the opportunity to be able to at least try to read through what it looks like in front of us each and every day. So that is something, and that's why Market Rebellion is so successful, is because other people want to see the same thing. And it's where is the market moving at that time? And obviously with Best Buy and the unusual option activity in there, John, they crushed it on earnings. They beat it pretty nicely on the revenues, although it was a decline year over year, but nonetheless, they beat the estimates. I think when you look at the guidance, that was up strong. They raised that up as well. You also look at the fact 52-week high. So when John was talking about 104 in the pre, If you even go back to the regular market, 103.71, that's 52-week highs. That was 2 times normal volume in the first 90 minutes of the trading session. Everything about what this looks like looks pretty daggone good. By the way, their PE, oh, it's really inflated. It's a 14 forward PE. So the stock is inexpensive. They absolutely are doing everything right. There's some shorts out there that are definitely licking their wounds today, John, because that don't feel very good. Free cash flow of well over $1 billion. I would say Best Buy has bounced back, bounced up, and they look fantastic right now with what they delivered this quarter.
Truly, they do. And this is one place where people love to shop. And if you haven't done it, folks, you go into a Best Buy and you say you've seen it at this price elsewhere, they'll pull it up. And if it's there, they match it like that, right on the spot. Yep. Love that. All right, let's take a look at Nutenix, Pete. This one also blew out earnings. Revenue over $500 million. That's up 11% over the same period a year ago. And yes, we had unusual activity. Oh, did you? Yeah, we did. There it is. 27th, 2 days ago. Just 2 days ago, we had the January 65 calls. Now, I realize those are out of the money pretty far, but they're also pretty far out in time. And as I always try to do, folks, I try to trade the at the money. And in this case, these guys were spot on. The stock has run to the upside. It's up 20% plus, and another big home run for the unusual activity crowd, Pete.
Yep. That cloud platform, they absolutely crushed it, John, in every way. I mean, you look at the revenue, it's up 11%. You look at the earnings, it's 27 cents versus the 24 cents from a year ago, which is the one thing I always do like to look at is what were they a year ago? In this case, they beat that. They were only supposed to be looking at about 20 cents, and they got 27. So they beat that, crushed that, if you want to call it that. I will. Total billings, that number was absolutely extraordinary as well. This is another one, John, where when you consider the fact that it's a cloud company, basically related, at least platform-wise, the PE at a 39, is that a little bit high? It might be a little bit high, and that's probably why the stock right now isn't at 52-week highs, but it ain't that far away from it. And if they can continue to do this, I think they might start to test those 52-week highs in the next quarter or so, and maybe we get even a better lift. Those 52-week highs, by the way, are 73. Right now, the stock is trading at about 62. It's not that far away, and I think before the end of the year, if they continue at this rate, they're going to bust through that as well.
Well, let's take a look at another one, Pete. This one not as rosy a picture, Dollar General. Yeah. And again, I remember when, Pete, people used to say, well, they'll do really well when people are, tightening their belts. In other words, when they're cutting back. Well, because Target and Walmart have come into their space so hard, Target and Walmart are taking a lot of customers. Even they had to identify that, Pete. So shares down significantly. Concerns about financially constrained core customer. Core customer is what their direct statement was, that they are constrained. That ain't good. And the next stock will tell you even more about how constrained customers are. But Dollar General, Pete, that's a pretty ugly looking chart.
It is ugly. It's very ugly. They missed on the earnings. That didn't look so good. Matter of fact, year over year, down a couple of percent, John. But the other thing is, it's the worst earnings report in 9 years. This is not something good at all. This shows you a lot of the struggle. And to your point, I think a lot of it is they've been losing customers, and the customers are going back to Target. They're going back to Walmart. And Walmart has done an amazing job, John, of getting the folks that are coming from those dollar-type discount stores, as well as some of the higher end that's come down and gotten sticky, and they're there. I think that's part of the reason why Walmart's had such an incredible run. They also lowered their guidance. Never a good thing. We talk about it all the time on these earning reports, but you lower the guidance, you're probably going to see some sellers come out there. We have, and this stock is now 52-week lows. That's not a good thing either. So it's unfortunate for them. They took advantage of it for a little while, but not terribly long, John. And now they, I think, are a little bit stretched. They got a little bit of a problem right now, and they're going to have to figure out how are they going to defend themselves against some of the trade downs, their trade overs, I should say, over to Target, over to Walmart, and get those customers back. If they can't, they're really going to be in trouble going forward.
Well, it was $168, Pete, on the highs back in April. And now it's $87 at the 52-week low. They've lost half the value of the stock. It was a $38 billion stock. Now it's a $19 billion stock. So pretty damn bad. All right. What does this stock have to do with whether the customer or consumer is doing well or not? Well, they're a buy now, pay later play. They are Affirm. Klarna, as Mark always says, Pete, is a privately held stock. This one publicly traded, AFRM. And yes, we had unusual activity in here. And they had what they call themselves a killer quarter. So just a few days ago, in fact, 1 week ago today, the stock was 30.5. I did this one on 3 at 3. Well, they bought the September 32 calls. Those calls, $2.51. How did that do? Well, today, Pete, the stock trades all the way up to 42. So the right to buy it at 32 when it's trading 42 is worth at least 10 plus a little time premium and so forth. So it stock's up 33%. This is a fabulous report, but also the third unusual activity that we've told you guys about. So if you haven't figured it out, you need to get this book. It's not an option. It's not an option is the book Pete and I wrote that helps you guys understand how to trade option strategies. You can claim the book for free. You will pay $9 to get it shipped out to you, but check out that book. Again, this is 245 pages of great intel. But as far as Affirm, Pete, would you buy it here or would you kind of hands off for a little bit after this big jump?
You know, I like so much about this earnings, John, that it's really kind of sucking me in. So to answer your question, I'll just go through a couple numbers. A year ago, they lost 69 cents. This year, they were expected to lose 48. They lost 14. I would say that's a pretty damn nice turnaround. They're still losing money, and that's my one issue. I still want to have companies that actually make money, but they're actually getting a heck of a lot closer. So it might be close enough now where you feel a little bit more comfortable about it. There are huge short interest here. They are getting squeezed. That's why this move, was it warranted? Yeah, I think a move of about 20% was warranted. I think the fact that it's up 33% shows you that the shorts are getting awfully nervous right now, John. The gross merchandise volume was up significantly year over year. Just unbelievable. It was $5.5 billion. Now it's $7.2 billion. But they do lose money. That's my one concern. So would I jump on them? I'd probably start thinking about it. But I'd love to see that they actually can show us that this buy now, pay later can work and work and work. And I think it can actually. So I'm still intrigued by this one. It's not necessarily at the 52-week high. So again, it's at least worth looking at and then trying to figure out, can they continue to do this? I think they can. So I'm getting more and more bullish the more I talk about Affirm.
Well, you know, our good friend, Pete, Bryn Talkington, accurately said, you know, other people can compete in this space, which is true. In particular, you'd think PayPal, you know, with Venmo and all the rest, could decide, hey, we can run buy now, pay later. A bunch of other good companies could do the same. These guys have done a magnificent job of establishing a beachhead and holding on to it. Doesn't mean they won't get eroded. Doesn't mean they haven't already seen some erosion by others. But I'm very impressed by what Affirm has done. And I'm not a buyer of it here, Pete, but on a dip after the earnings, I think I will.
Love it. Love it. All right. You ready to run some sports?
Let's do it.
All right. So I'm excited about everything that John was just talking about the four stocks that we highlighted, but the monstrous moves and the unusual option activity. You want to talk about a little bit unusual. The football portal in NCAA football, John, it's a really interesting thing. And I think a lot of people have their own versions of what they like or don't like about it. So you and I are going to discuss that in a second, but I got to highlight one guy, Dylan Gabriel, the quarterback who now is at Oregon. He's started 49 games already in his career, John. He will shatter records as far as how many games he will start as a football player, not just quarterback, but as a football player. He could be the first player ever to be named first team all conference in 3 different conferences. Well, there's a good reason for that. You didn't used to be able to do anything like that either, where you're jumping from team to team and school to school and staying eligible while you're doing it. He started off at Central Florida, then he goes to Oklahoma, then he goes to Oregon. So now he's at Oregon this year. It should be pretty exciting. But John, what do you think about this? I think personally, I like the portal because you know what? If a player is somewhere and they don't know for sure that they're going to be able to continue to be there, or they're moving for whatever reason, they don't like the coach or something like that, that's understandable. But I think there's got to be some kind of a restriction on this whole thing. I don't like the idea that there are players that literally might play at 5 different universities during their career because they keep moving, jumping from one to the other, to the other, to the other. Now, I get all the other arguments, and I agree with some of them where you know what, you're not happy, you don't like the coach, you want to play somewhere else. I totally get it. But what do you think about this, John? And should they do restrictions, or am I being a little bit too, I don't know, conservative about it, or what?
Well, I get where you're coming from. I'm playing the devil's advocate rather,
That's
Pete.
okay.
And that is that not only did I do exactly what Pete described, I played at 3 different universities, 1 different college. So Normandale Junior College. That's right. Normandale Junior College, University of Cal Berkeley, Cornell, and Gustavus Adolphus. So I guess 2 colleges and 2 universities there. But anyway, I like it just because there's a player like this that I may have never seen.
Mm-hmm.
Now that he's at Oregon, I'll see him. If he stayed at Central Florida, I would never have seen him, Pete, unless I accidentally was just flipping through channels and somehow came across a University of Central Florida, UCF game. I don't watch them. So I'd never see this kid. So I don't mind. I mean, if they want to throw some talent at a different school, I don't mind watching that talent play at that school, because like I say, how many people do I ever see play at North Carolina? Very few, because I don't tend to watch that team. But Oregon, USC, let's not forget Caleb Williams. Where was he before USC, Pete?
Oklahoma.
Exactly. So I like the idea that these guys move around. You can make it a little more exciting, but I understand where you're coming from as a guy who played all 4 years at one school.
Mm-hmm. Yeah, no, it's not a huge axe on this one. My bigger axe is NIL and how they can figure that out a much better way. If anybody didn't see this, please go and look at Oklahoma football. The linebacker on that team, John's getting a very nice NIL money, right? He came out in front of the team yesterday, stood up in front of me, and he said, I want these 16 or 18 walk-ons to come up here behind me, and they did. And he goes, you know what? I got a lot of money from NIL, but I'm a team player. I'm splitting it with all you guys. How great is that? I want to see Shedeur Sanders do that, John. That'll show me he's a team player. And by the way, they got North Dakota State today, and that might not be a walkover for them. I don't know about that one. That might be kind of interesting because North Dakota State puts out some pretty stud players every year into the NFL. They do a good job.
Yeah. All right. And as just one follow-on to that, Pete, most teams that Colorado would have scheduled for the first game like this that are former Division II and 1A teams wouldn't have the depth. Mm-hmm. These guys have depth, and generally speaking, Colorado does not. Right. Because of some of Deion's antics. They have a great team, or at least a very good team, maybe not a great team. They have a very good team, but the depth is not there because a lot of those kids got frustrated and left, and we'll have to see whether or not Deion can keep the thing rolling through a second season and do better than that first season, Pete.
And he's got some issues with some of the reporters out there now too, John, because he's only going to talk to certain people, all that whole thing. I mean, it's starting to maybe implode. And I'll tell you, if they lose game one, and maybe they blow them out today, right? Shedeur is a great quarterback. Hunter's a great football player. So there's a lot of reasons to say, well, they're going to win this game. And they likely will. They should. But if they don't, then what? How are those interviews with Dion after that? I mean, let's be honest. That gets a little bit hairy and a little bit interesting for sure. All right, John, sticking with college football, the SEC. Now, I wanted to point out, who is the smartest team to go and say, you know what, we need to join the SEC for this reason or that reason? Is it Texas? Maybe. Is it Oklahoma? Could be. I'm going to throw somebody out there that nobody's talking about, and they did this in 2012. Missouri. Missouri left the Big 12. They go to the SEC, and I didn't even realize it myself, John. I know they had a great year last year. They went 11-2. That's not a bad year for anybody. And that's in the SEC, playing the SEC teams, right? So you know who's back? The quarterback Cook, he's back. The running back Schrader, he's back. The wide receiver Burden III, he's back. This is a football team that probably doesn't get nearly enough credit from anybody. And they're ranked pretty high this year. They're ranked, I think, number 11. So they're getting credit. But let's talk about that for a second. I mean, these guys have done everything right. They want, one of the reasons they left, John, the Longhorn Network. And I don't know if you remember that whole boondoggle, but they had their own network for Texas, or supposed to be for the Big 12, but clearly it's called the Longhorn Network. I mean, I wonder what that lean is. So you've got that. That was something they didn't like. They didn't like the uncertainty of what was going on with the Pac-12 and all the rest of that, because some of the teams were bouncing around and doing that. And the stability wasn't there because they'd already lost Nebraska to the Big Ten, right? So all of that has happened. And now finally we are seeing, you know, what's happening now, which has been all of this huge movement, but particularly Texas and what we're seeing from some of those schools like Oklahoma as well. What do you think about Mizzou's chances this year? If they were 11-2 last year and they're returning these kind of players, John, this could make for a really interesting year. What if, just what if in the SEC, you got 3 Big 12 teams that finish somewhere in that top 4 sort of an area, maybe behind Georgia or whomever. But that makes this pretty damn interesting, I think, with the Big 12 movement we've gotten out of these guys. Yeah.
And one of the reasons, Pete, is I think it's Columbia, Missouri, where the Tigers play, is a really tough place to play. Not because they have the loudest fans, but it is just stiflingly hot and muggy. And Oklahoma's hot, not as muggy. Arkansas is hot, not as muggy. I mean, the Missouri Valley tends to like just put this cloud on top of these guys that makes it really tough. They run out of gas. And Missouri practices there every day, of course, so they're ready for it. But when people play on the road at Missouri or at Mizzou, it's tough. Yeah. So I think as a combination of better players that they've been able to attract and keep, to your point, because all those players you talked about are back, as well as a tough place to play, I think that makes this a very interesting team to watch.
Yeah. And the last thing I'll say is the fact that private equity can now get involved in the NFL as far as investing in teams, John, that's an interesting topic right there. Just because, you know, we all know that those PE firms, they can have some ups for sure. They also can have some downs for sure. How's that going to affect the ownership level if they are part of that? And I don't think it's that big a deal personally, but I think you could probably make some arguments why it is a big deal as well.
Well, thanks for joining us, folks. As you know, we're traveling on Fridays, Pete and I are, so we do not have a show tomorrow. But we will be back Tuesday, not Monday, because that's obviously a holiday. And after Labor Day, we'll be back Tuesday, 1 p.m. Eastern Time. We'll see you then.